During the day, our board has approved financial results for the quarter and year ended March 31st, 2023, and we have released the same to the stock exchanges as well as updated the same in our website. Please note that this conference call is being recorded and a transcript of the same will be made available on the website of the company. Please note that the audio of the conference call is the copyright material of Divi's Laboratories Limited and cannot be copied, rebroadcasted or attributed in press or media without specific and written consent. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations of future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Divi's Labs or its officials does not undertake any obligation to publicly update any forward-looking statement, whether as a result of future events or otherwise. Now, I hand over the conference to Dr. Murali K. Divi for opening remarks. Over to you, sir.
Good afternoon, ladies and gentlemen, and welcome to our fourth quarter financial year 22-23 conference call. It's great pleasure to have you all here, and I hope you, your families, and your loved ones are all in good health. Before we dive into the details of our financial performance, let me update you on our operations. The global pharmaceutical industry has entered a new phase following 2 years of adapting to the pandemic. I would like to report that despite the market volatility, Divi has maintained efficient and sustainable operations. We have capitalized on new opportunities to fuel growth after experiencing a gradual return to normalcy in the core API product portfolio, and are actively pursuing our 6-point strategic approach to unlock further growth potential. With increased opportunities and demand for generic APIs in segments such as contrast media, sartans, and products about to go off patent, we foresee multiple growth opportunities over the next 3 years. Additionally, our custom synthesis projects and collaboration with Big Pharma for contrast media production is progressing well, and commercial manufacturing has started. FY22-23 has been a year of significant progress for Divi, with all clearances obtained for our Unit 3 facility near Kakinada. Construction activity on the 500 acres of land is progressing well, and a capex of Indian rupees 1,200 to 1,500 rupees for phase 1 development is in the final stages of strategic refinement. Looking ahead, we remain steadfast on maximizing sustainable growth potential through investments in new technologies, production capacity expansion, and diversification of the product portfolio to meet the requirements of emerging pipelines and continue to maintain a leadership position in our core products through the implementation of green chemistry principles. We continue to operate responsibly and make a positive impact in the communities where our business operates. During the last quarter, we have actively engaged in various CSR activities in the areas surrounding our manufacturing facilities. As a part of our project, Sujalam and Jal Prasadam, we have installed RO plants at various temples and schools in Telangana and Andhra Pradesh. Additionally, we have developed village infrastructure through the construction of roads and developing sewage systems across AP and Telangana. which benefited thousands of people. Now, Ms. Nilma Divi will highlight the operational and financial highlights of the quarter. Thank you.
Ladies and gentlemen, a very good afternoon to each one of you. Thank you very much for joining us today as we gather here to discuss the outcomes of the fourth quarter of FY22-23. Firstly, I'm pleased to inform you that we maintained an uninterrupted customer shipment throughout the quarter. Our commitment to meeting customer requirements on time remains resolute. Additionally, there were positive developments in global logistics sector concerning sea and air freight costs during the quarter. Furthermore, we have achieved stability in raw material procurement and availability, leading to slight softening in material prices compared to the previous quarter. As a conscious, continuous effort made by the organization to develop and support domestic supplier base while geographically diversifying the sourcing risk, the dependency on China has been lower as compared to the previous year. Moving forward to FY 2024, our focus remains unwavering. We aim to operate our facilities at maximum capacity to oversee the evolving demands of an uncertain economic environment. We are successfully progressing with our diversification map and actively pursuing opportunities that lie ahead, all while focusing on long-term priorities. The company has implemented strategies such as diversifying the supply base to maintain its leadership position in core products while remaining mindful on global developments. Our dedication to diligent risk mitigation efforts, ensuring supply chain stability, efficient transit time, and uninterrupted provision of APIs to our customers has positioned us as a reliable supplier to the global pharmaceutical industry. With a robust supply base and inventory control, we are confident in facing challenges that may come our way. I'll now provide you with an overview of the financial performance during the fourth quarter of the fiscal year 2022-23. We have achieved a consolidated total revenue of rupees 2,017 crores for the quarter as against a revenue of rupees 2,571 crores for the corresponding previous quarter of last year. Material consumption for this quarter came to be about 42% of the sales revenue due to change in the product mix. Profit before tax for the quarter amounted to rupees 466 crores, and we have a profit after tax of rupees 321 crores for the quarter. For the financial year 2022-23, we have a consolidated revenue of rupees 8,112 crores, PBT of rupees 2,369 crores, and profit after tax of rupees 1,823 crores. Exports for the quarter continues to be around 90%, and the exports to US and Europe is about 68% of our revenue for the quarter and 70% for the year. Product mix for generics to custom synthesis is 56-44 for the year, and it is 59-41 for the quarter. We have a forex loss of rupees 4 crores for the quarter, while we had a gain of rupees 130 crores for the year. As we have lower sales revenue during the quarter, our constant currency growth for the quarter has been negative at 32%, while it has been negative at 21% for the year. Our nutraceutical business amounted to rupees 150 crores for the quarter and rupees 660 crores for the year. We have capitalized assets of rupees 480 crores during the quarter and rupees 745 crores for the year. We have capital work in progress of about rupees 212 crores as at the end of the quarter. As of 31st March, we have cash on book rupees 4,136 crores, receivables 1,793 crores, and inventories 3,000 crores. Thank you.
Thank you, ma'am. With this, we would request the moderator to open the lines for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Sir, would like to understand in terms of raw material pricing trajectory where we stand based having backward integration in place as well. And so is 57, 58% is the new normal in terms of gross margin, or we see upward trend based on backward integration and raw material prices softening? Thank you.
The raw material prices, I think, our raw material prices are coming down. Not only they are stabilizing, they are in fact coming down, and we should be able to see benefits in the coming quarters and going towards where we used to be in the past.
Sir, any timeline you would like to provide in terms of going back to our normal gross margin of 67, 68%?
Can you please repeat your question again?
Can you provide the timeline in terms of going back to our earlier range of gross margin?
It's difficult to say exactly when on quarter, but we should be able to see that towards the end of the year.
Understood, sir. That helps. Thank you. That's it from me.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, good afternoon, and thanks for the opportunity. My first question is on, you talked about contrast media in the innovator business segment. If you could talk about, how many products are these, what is the target market, and how do you see this ramp up happening?
Contrast media, the big opportunity we are talking about is one thing. We also have the iopamidol, iohexol as our regular generic products, where we increase its capacity, qualifications are under completion and growing. We already are in the market, we have existing customers, but with the increased demand, we have already expanded, and the expanded capacities are under qualifications with various customers. That should see growth. That's number one. Two, with one of the big pharmas where we have the contrast media, the validations are complete, the commercial production has started. So you will see in the coming quarters.
And what is the size of the opportunity?
Like in every generic product, I think everybody knows what is contrast media and what is the total business. We are building world-class plants to be as a supplier of contrast media, active ingredients, and we should become the leader in the next 2-3 years, just like we became leaders in naproxen, gabapentin, just about every generic product we are in. And also, I think the gadolinium compounds, which are the main MRI compounds where the revolution is happening now, with changing from gadolinium to other metals, there also we are heavily involved with the customers as well as our own research to manufacture development of process at our own labs.
Okay, thank you. And second one is on, I think Nilima ma'am said about change in the product mix. So, have we talked about what is the custom synthesis generics share? I'm sorry if I missed that.
Yeah, the custom synthesis and generic share we like to have 50/50, but we always are saying see either 60/40 or 40/60. Right now on the yearly basis, it is on 56/44, 56 generic and 44 custom synthesis, whereas in the Q4 it was 59 generic and 41 custom synthesis.
Okay. And do you expect this trend to little bit change? I mean, 50/50 over what period of time, sir?
I think it's always, I think from day one when I entered custom synthesis, I have been saying 40/60 or 60/40 is not in our control because it's the customer's wish. And sometimes many products join in the custom synthesis. So you will see for a few quarters it goes towards 55, 56, 57. In some quarters, as the new generics or generic products take off and the percentage shifts to that side. But we are in the more or less 40/60, 60/40, and I don't think we will be 20/80 or 80/20 even in future.
Okay, fair enough. I have more questions. I'll join back with you. Thank you so much.
Thank you. The next question is from the line of Surya Narayan Patra from Phillip Capital India Private Limited. Please go ahead.
Yeah, thank you, sir. Thanks for this opportunity. My first question is on the margin front. Sir, are we seeing any kind of unprecedented business environment currently for our business? I'm asking this question because let's say in the second half of FY23, the third quarter and fourth quarter, the margins, if reported margin, if you see it is less than 25% or around 25%, which is kind of the lowest in last 10 years. And same is even in the gross margin front also, if we see, that is also around in the range of 57%, which is never been the case over last 10-year period. So any specific unprecedented condition that we are witnessing for our business? Because product mix wise, we have been more or less stable at that level of 40-60 kind of equation. But the cost wise and the margin wise, we have seen a kind of a meaningful correction since last quarter, third quarter onwards. So if you can clarify a bit here, that would be helpful.
There is nothing that happened like sky is falling down, you know. So there's nothing unprecedented thing that happened. I think it's the general course that took place where always I used to say for the last several years, you should not judge the company by quarter on quarter, and I think it varies. Some quarters maybe it looks similar, but some quarters up and down. It's quite common. So I don't think there is any particular attributable something happened in the last 2 quarters. One, I can say that whatever the anti-COVID drug, a one-time opportunity we had there, it gave us a good push in the sales, and that fortunately for the public and the health, there is no COVID drug requirement now. But when there are several other opportunities where we are entering, I think we should be back into the profitability. I think it's not just that, it is the product mix, it is the raw materials which were procured at higher prices, which we had to consume them. And we have to charge the pricing based on the inventory we have been carrying, which were purchased. Like we don't keep normally more than 3 months stock, but we had kept 6 months, 9 months stock of raw materials, anticipating problems from China, COVID, and various things. So until we consume them totally, this price fluctuation happens. So that is over now. So going forward, we should be able to, as I was mentioning to the earlier, that we should be able to see normalcy towards the end of the year.
Sure, sir. So my second question is on the opening commentary that you have during your opening commentary you have mentioned for your progressive growth in the business. So in the operation side, you have indicated that the technology upgradation, green chemistry principles, adopting those. So those kind of aspects that you have indicated. For the first time, I think the green chemistry aspect also you mentioned. So can you just add some more color to that, sir?
See, it's not a choice to add green chemistry. It's not a choice to come into the new chemistries. They're a must to do business in current days with US, Europe, and the big farmers. We have to do all that. It has two advantages, at least. One, the new technologies will bring more productivity, bringing down the raw material cost, efficiently using or conserving our resources. These are right from water, energy to various other solvents which are rare or rare metals like palladium and nickel. And there are various advantages. Yes, these are again, we have to look at the long-term goal, where in the next 1 to 3 years, if we didn't do this in the last 1-2 years, probably either we will be in a very bad shape or we wouldn't be in business. Having done all this now, we are very comfortable in looking at for the next 3 years, 5 years, and 10 years. Otherwise, I wouldn't invest 1,200 to 1,500 crores in Unit 3, where we started on fast-track construction activity in the beginning of April, where we received all go. Now, the person buildings under construction are on fast track, utility buildings, and the whole site of 500 acres in full swing now. That shows the confidence of the company on the products and technology and opportunities.
So just one last clarification from my side. See here, is one of your 6-month strategy for growth is that the generic opportunity that is coming up. So here, whether our focus is intermediate or it is a final API, because the DMF filings, if I see, obviously there is limited number of filing with USA. So whether our focus is largely about intermediate and integrated intermediate, that is how we should think, or how should we think that?
If I am not mistaken, you are talking about our 6th growth engine, which is a $20 billion
exactly,
expiry between 23 to 25.
Yes.
As we mentioned every quarter, we updated you that we have submitted drug master. Our first focus is for the API. Let me be clear.
Sure, sir. Okay.
And the intermediates or advanced intermediates we submit are probably for the innovators or for the supplier of something else. Otherwise, our objective is to make APIs and be ready for the patent expiry and have quantities for supplying for qualifications and submitting for the regulations.
Sure, sir. Yeah. Thank you, sir. Thank you. Wish you all the best.
Thank you. The next question is from the line of Cinderella Carvalho from JM Financial. Please go ahead.
Thanks for the opportunity. So I just wanted to understand, last call we had said that 2 custom synthesis products will go somewhere either end of Q4 or Q1. What's the update on that?
Pardon?
What's the update on that? The 2 custom synthesis project that we were supposed to commission. either end of Q4 or Q1 is what you had said in your in our last earnings call. So what's the update on that? Am I audible, sir?
Yes, you are audible. Thank you. Out of these two, one product, which is a sartan, it has already gone into commercial production and commercial supply. It will add up in our coming quarters. Gone into commercial activity. The second one, custom synthesis, the qualifications are complete. We supplied. Now the ramp up of production is happening for supplying quarter. I think these will reflect both of them will reflect from the coming quarters.
Okay. And so if I look at earlier our conversation, we had also said that the pricing scenario in API, generic APIs was weaker. How do you see it right now? And compared to that, how are our realizations given that there is some softening of raw material cost as Nilima highlighted? So how should we see the realizations and the pricing scenario on the API side, key API side of ours?
I think it's a mixed feeling. Some of the generic products, we do not see any pressure on the pricing, sales price, or on our demand. I think still they are good. But yes, in some of the generic APIs, because of after the COVID impact, there are huge stocks of dosage forms, and they are fighting the dosage form companies, generics. They are fighting for getting rid of before the expiry of the expiry, and hence they in the prices of generic dosage forms and less. They need APIs again. So I expect the prices to stabilize and we should see improvement in the coming quarters.
So just a clarification on this. So would you like to give us some guidance on the growth for FY24 and on the sartan that are there?
First of all, I think the confidentiality agreement we supplied to talk about the very existence of the contract. But
thank you.
I think it is in the open that Divi supplies some sartan. So I mentioned that yes, that project it has been validated. Commercial supplies are already ramped up. One of them.
Right. And on the growth, sir, would you like to help us understand, given that we see things stabilizing here onwards from the coming quarter, would you like to indicate some kind of growth trajectory on FY24 for us, given that we are carrying a 3,000 odd crore inventory? Should we expect at least minimum of 7,500 odd crore top line on it? Is that a fair assumption, at least, or you think we should look at it some other way?
I think we have been growing at double-digit growth. I'm talking about even without the one-time opportunity of the COVID drug. And I think we'll continue growing at that rate, a double-digit growth.
That is very, very helpful, sir. All the best and thank you. I'll join back to queue for more questions.
Thank you. We have the next question from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Good afternoon, and thank you for taking my question. Just using the numbers for the quarter for generic, custom, and nutraceuticals. So just want to get your comments on some of the segments. We've finally seen custom synthesis improve QOQ. I'm talking about Q4 versus Q3. 680 crores has gone to 800 crores. Just the CS part. So is that the two CS projects, at least the certain projects, would that be the reason for the growth, or there are other levers there? That's question one. When I look at generic API excluding nutraceuticals, the jump has been even better. We have gone from 875 crores to about 1,000 odd crores. So if you can help us understand, I know you don't like looking at QOQ, but what are some of those that is driving the sequential about I think 17% QOQ growth on custom, 14% QOQ growth on generic API excluding nutraceuticals?
Again, we cannot really say what will be the exact growth, how many hundreds of tons they will buy and all that, because we cannot talk about even the existence of relationship. But what we can say is that we have built capacity as per or more than the requirement of the big pharma or the generic industry. Always, we are one step ahead of whatever is the requirement. So now coming back to your, I cannot disclose the quantities and what kind of ramp up we can see in the next quarters as rupee term or volume, but definitely these are very long-term projects, custom synthesis projects, and we are seeing several other opportunities in custom synthesis projects from big pharma. Never seen so many opportunities. Now coming back to your nutraceuticals also is growing, and in fact we needed expansion of both nutraceuticals and as several custom synthesis projects. Hence, I think I need to update also the shareholders that the Unit 3 project, what we are taking now, 1,200-1,500 crores to begin with. We will be manufacturing some of the nutraceutical APIs, some of our advanced intermediates, registered starting materials, so that our existing production buildings at Unit 1 and Unit 2 will be freed to that extent, whereby GMP, USP, FDA inspected, European FDA inspected buildings will be able to take advantage to produce the required quantities of new opportunities of custom synthesis and other generic products. Whereas the Unit 3, where we are investing 1,200 to 1,500 crores, first to begin with, it will start manufacturing the research starting materials, the intermediates, nutraceutical APIs, and the second phase, it will enter into the APIs, which usually take 3 to 4 years for the qualifications and US FDA inspection clearance, and then be able to sell. So we are trying to bring a win-win situation of creating capacity and utilizing the capacity in the right way.
Okay, sir. Helpful. Second question, just taking a question from the previous participant on margins, right? I'm just comparing your fourth quarter, all the different cost items to say something like fiscal 19, fiscal 18. I'm just comparing 4Q to fiscal 19 or 18 pre-COVID numbers. So material cost then was between 38, 39%. Today is 42% for the quarter. That is one number that I can see, which we are 300 basis points higher than historical levels. If I look at the other number, it's other expenses, right? Non-wages. That's 19% for the quarter versus historical number of 15 to 16%. So if you can kind of explain, just these two numbers, is this investments that are going through, or on the material cost, is it the mix that has changed? If you could help us understand and how we should think about it for fiscal 24. I think that's the other question.
See, some of it must have gone into that the buildings which we were building in 1995, 96, several of them have been upgraded and going through upgradation to meet the new standards of or current standards of or future standards of both GMP, safety, environment. This is related not only of the building, but also of the equipment and other accessories. That is one. Two, I think on the material, I think I already explained to you that the process efficiency, there is no difference. In fact, we have improved our process efficiencies. What happened is that where we procured raw materials when there were shortages 9 months ago, 1 year ago, the stocks of 6 months to 9 months, they are now, because first come, first out, they are being consumed. They are being consumed. That's how the raw material prices are higher. There is nothing like either yields are down or production issues exist. There is nothing like that. In fact, efficiencies have gone up. We see the trend of prices even going down for the raw materials. So we always wish to go back to where we were. It's definitely on the raw material costs are better. Because of the new technologies we have implemented, and because of some of the starting materials we started manufacturing.
Got it, sir. That's helpful. And last question, what's our current net block, like in rupees crores? And just want to understand, you historically used to guide us on, fixed asset terms. Would that be, can we go back to like a 2 times terms, and what's the kind of investments we're looking at? Other than the Kakinada, what is the non-Kakinada kind of capex you're looking at? Thank you.
I think Kakinada, I mentioned that when we planned 5 years ago the unit, would have envisaged about 1,000 crores of investment. Whereas after 5 years, where we got all the clearances and with the product plans that are currently in place, we are estimating it should be 12 to 1,500 crores for phase 1. And we are also in discussions to see in the phase 2 what kind of investments we should be doing. But our first target is phase 1 implementation. And of course, all these come from the 4,000 plus crores of reserves that exist. So no loans, it's only better utilization of reserves which are in the form of fixed deposits.
Got it, sir. Thank you and all the best. Thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thank you so much. Sir, just on Kakinada, by when can we expect the phase 1 to start manufacturing nutraceuticals and advanced intermediaries that you mentioned?
It is a greenfield project, and we just started the last month the ground cleanup, and we expect to commercialize by end of 24.
This will be fiscal year 24, calendar year?
Calendar year.
Understood. So then we should start seeing, let's say, higher growth because it will free up capacity in unit 1 and 2 from fiscal year 25. Is that fair to assume?
Yes, because once we complete in 24, we should be able to see that in 25, and as the capacities become free in the existing buildings of units 1 and 2, we should be introducing additional products, additional capacities, new products of custom synthesis are generic into those buildings. You are right.
Understood. Nilima, on the raw material cost, you mentioned quarter on quarter, for the gross margin trend. Hello?
Sorry to interrupt, but the line for you seems to be breaking up in between. I request you to please repeat your question.
Sorry, that is there?
No, ma'am, it's still breaking up.
Is this better?
This is better, ma'am.
Okay, sorry about that. Nilima, you mentioned raw material prices softening quarter on quarter, but if I were to look at gross margins, despite the contribution from custom synthesis and lower freight cost, raw material cost, we haven't seen as much improvement. Is it fair to assume that we are still consuming the high cost inventory and there is pricing pressure in generic API? That's why we're not seeing the requisite margins?
Well, we are doing a mix of both the materials that are there, which are procured from a higher cost, and also some of the materials where, the material price has softened. And it's a mix that's happening right now because, the price is transitioning from a higher price to a lower price. So it wouldn't completely reflect in this quarter. Probably in the forward quarters, you might see that particular difference.
Okay, so should we assume a few more quarters where we continue to consume high-cost inventory?
No, I think it would be slightly improving situation as we go on to the Q1 and forward. And also, we did mention earlier that there has been pricing pressures in the generic market, and that's also one of the effects that has been reflecting in this particular area.
What would be the generic pricing, the API pricing pressure that you've seen, let's say, quarter on quarter, reflecting in the margins?
Can you repeat that question again, please?
What would be the pricing pressure that you would have seen in the quarter? Just trying to understand what is the impact in the quarter because of that.
It's very difficult to say that because it's a combination of several products and it's very difficult to say.
Understood. Thank you so much, sir.
Thank you. We have the next question from the line of Bino Pathiparampil from Elara Capital. Please go ahead.
Hi, good afternoon to all. Most of my questions have been answered. Just one remaining. What would be your corporate tax rates at the consolidated level going forward for the next 2-3 years, given that your facilities are coming up in various sorts of SEZs, etc.? At a blended basis, what sort of margin can we take? Sorry, what sort of tax rate can we take?
I think it's expected to be, as we are coming to the closing of SEZ and SEZ benefits slowly phasing out. So we expect the tax to be around 25-27%. I think that's what I can say in the next 15 years.
Understood. Thank you very much.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good afternoon. Thanks for the opportunity. 2-3 questions, sir. One is if I go back to our strategic levers, which we had mentioned in our annual report, and 2 of them were to gain further market share in products where we already have 60-70% market share, and gain market share in products where we are at 20-30%. Now, considering the scenario which is playing out in APIs of inventory destocking and excessive price competition, would you say our ability to gain further market share gets restricted in any way in those existing products, or would you say our capabilities and our costs remain the same and probably there is still room for this lever to play significantly?
In the generic products, I think we have 2 growth engines which we mentioned it to you. Number 1, traditional generic established products like naproxen, dextromethorphan, gabapentin, where we have the 60%-70% market. That's where in some of the products the material price is the issue, market is not the issue. And some of our customers where they have large volumes stocks of dosage forms due to COVID, I think now they are destocking, and once that is over, the price pressure should disappear. So coming back to the other generic products where we were in 20-30% and we increased the capacity substantially to become number 2 or number 1 in the market. We have done the increase in capacity, qualifications are completed, and commercial sales have started. But to see the full benefit, I think it will take at least 4 to 8 quarters to take the full benefit of the capacity we created. Because it will happen based on the qualifications by the end customers.
Okay, fine, sir. Second, sir, if I look at the amount of capex which we did and over the last 3 years, I would presume that a lot of this capacity would still be at around 65-70% kind of utilization versus last year's similar quarter when we said we were at 80-85. Would that be a right assumption? And is that a fixed cost of these capacity hitting our profitability to some extent? Because if I look at year on year, our other expenses is significantly higher, even the sales is lower in the same quarter last year. So is it the fixed cost which is there, which is not completely utilized because of lower capacity utilization?
I think it's not the lower utilization. I think we have mentioned that the capacity utilization is around 70-80% capacity utilization. It's a combination of product mix and probably a mix where some of the products probably requiring more capacity to arrive at the stages, more number of stages, some not requiring. And where we have allocated existing and created capacity to the COVID drug, we have to reallocate to the other products. That's where some of the probably bottlenecks we faced during coming out of the COVID drug selling enjoyment or with the reward of whatever we received. But also when there is no demand, there is no big demand, there is no use of keeping the equipment idle. So we started using them. That would take some time. So it's a combination. I think it's very difficult to pinpoint. But the capacity utilization is about 70-80%.
Okay. And last question on contrast media, sir. And one of the questions and the whole hypothesis which we mentioned are right to win in this segment was that because the iodine prices have gone significantly up and our process was such that our recoveries in iodine were much better. And as I understand, on the non-gadolinium products, iodine cost is a significant part. But just if the iodine prices were to go down or come back to what it was in pre-COVID, would you say the willingness of the end customer to shift to a new supplier can go down? Or is it like, are there any structural factors for one is the iodine prices remaining high, and secondly, even the customer looking at more outsourcing rather than putting new capacities?
Your last point is a very valid point. That is what we would like to say, that the customer is looking at it, the growth is minimum of 10%, and 10% of, let's say, 2,500 to 5,000 tons of each contrast media, requiring 200 tons to 300 tons a year extra quantity. Now, either they have to install new capacity or they have to outsource. This is where we have an advantage of creating capacity at low cost. Already technologies are in place, that much files are in place, and also there is an advantage of the iodine recovery, bringing costs into compliance. I think it's an additional advantage for us to be selected as a supplier. Then they do need the extra capacity.
In one question,
the world is growing in contrast media.
Sure. One question, if you permit. On the gadolinium side, you had mentioned in last call that we were still developing the product and all, because on our website it does not show in the listed products. So are we done with the validation batches, or if you can just help us understand where are we in the development on the gadolinium side so as to participate in the total contrast media marketplace?
Again, this is MRI contrast media. These are not related to the regular contrast. So we have developed process for some of them, and we are developing process. Usually there are only 2 or 3 buyers. We don't need to make a whole list of compounds and publish in the whole world. No, it's the 2 or 3 customers who are in the gadolinium compound. We are in touch with them. We are in discussions with them.
Okay, fine. Thanks. I'll come back to the queue.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to 2 per participant. For follow-up questions, you may please rejoin the queue. The next question is from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Thank you, sir, to provide me an opportunity. Sir, as you mentioned in the initial remarks, can we expect a revenue for media agents in first quarter? That is my first question. And second, sir, we have taken the name of a generic API like gabapentin and naproxen. How was the volume uptake in last quarter, and what kind of a volume uptake we are looking in this quarter?
I think the generic products like gabapentin, it is consistent. There are no issues up and down. It's only a price variation, but the market is still continuing the same. What is your other question, please?
Contrast media agent, that contracting already started. Can we expect a revenue in this quarter, Q1?
We don't want to say Q1, Q2, Q3 or next year. I think they have invested in us with tech transfer and everything, and then validations are completed. Commercial ramp up is already in progress. So I think I would leave it to you.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Nirali Gopani from Unique Portfolio Management Services. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is on the EBITDA margin. Sorry to go back to that point. So when we, in the starting of the year, like in our Q1 call also, you were very sure that FY23 40% margin is sustainable. So what I want to understand is that what did happen in the last 6 months, which was not expected by you also, because we went back to a margin which we have not seen in the last 10 years. Sorry, sir. Yeah.
I don't think I said unexpected. There is nothing unexpected that happened. There is no one-time events that happened. I think it's in the course of business, moving from COVID 3 years to closing down, and again people getting into the back to normal business, and pharma business getting into, instead of concentrating only on COVID and COVID drugs, into the general. I think that is what happened. People who had huge stocks, destocking them, price pressures, raw material where we produce at higher prices to be until they get stuck out and be replaced with the materials that come with lower prices now. I think that is the issue. There is nothing like unprecedented, nothing has happened.
Right, sir. Just because we as investors would have expected that, if you could have revised your guidance or just guided us, then this would not have a shocker like it is today. So that's the only reason that I got back to this point. Thank you, sir.
Well, nobody thought that the COVID go away just like that. Because we had plans of continuing production and we had plans of the big pharmas or whoever involved also had. And we had even additional opportunities into new COVID drugs. And all of a sudden, the COVID disappeared. So I think it happened within, I would say, 3 to 4 months, all this change.
No, that's it from my side. Thank you, sir.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead. Mr. Prakash Agarwal, the line for you has been unmuted. You may proceed with your question.
Yeah, hi. Am I audible now?
Yes, you are.
Yeah, thanks for the opportunity again. I had a clarification actually on the Kakinada plant. So this is the same plant which had approval issues. Now that 1,000 crore budget is moved to 1,500 crore and phase 1 construction is on fast track. Is the understanding correct?
We understand, yes, what is correct is the investment of 1,200 to 1,500 crores is correct. The 1,000 crores was originally planned 5 years ago. And the product planned were also different at that time. With the current scenario where we are in, now the planning is of product mix is different and the designs are different. That's how it's about, yes, in the phase 1, 1,200 to 1,500 crores is planned and it is going on fast track.
Okay, understood. And the construction you said is on fast track, and you expect commercialization in next 2-3 years, like fiscal 27-28, or?
Not 3 years. I said by end of 24 financial year.
Okay, and it will start revenue generating from 25-26.
Yes.
Okay, and any other facilities, sir, where we are investing for future growth apart from this major one?
We are in discussions with several big pharmas for several products. So I think we will take decisions as we will have a number of opportunities to add capacities in at least the unit 3 and unit 1. So let's wait for the next quarter to come out with that investment.
Okay, perfect, great. Thank you and all the best.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Satish Choudhury for closing comments. Over to you, sir.
Thank you all for joining us today for the earnings call of Divi's Laboratories Limited. In case you need any further clarifications, please reach out to our investor relations. Thank you.
Thank you. On behalf of Divi's Laboratories Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.